Good afternoon, traders. This is Christian from Trade Group, and this is your end of day recap for Tuesday, December 5th. We'll go through in this video what the indices did today. I think that there's definitely some levels to watch. We'll talk about what performed well today, what didn't. I think, as you can see with the spreadsheet that I've got in front of you, that there's quite a bit of different performers for the day. So I will go over those as well. And then we'll also talk about, some of these stronger names. I've got, my list of earnings strength, earnings gap lists has over 80 names at it at this point from this last earnings quarter. So there's a lot of names to go through, but what's always interesting to me is what names did particularly, or what names, are pulling back a little bit versus what names are not really pulling back that much, right, in terms of buying some of the potential dip opportunities. So I'll give you a couple examples of those names. So sorry, I'm watching the news kind of roll out here as more names are kind of coming out with earnings. I didn't see Toll Brothers, but it looks like Toll Brothers came out. This is what my end of days are normally like, just providing a little bit of context in terms of, Toll Brother, of what names are reporting earnings. Looks like Toll Brothers had some good numbers. I see them up a little bit. Where's deliveries forecast, which I think is what they're really concerned with, beat earnings. So I'm just going to throw this in our trading room here. Whoops. There we go. And we'll move back to this. We'll talk about some trades for the day too. All right. So first of all, what do we have here for the S&P? Well, not much. It kind of looks like a doji candle for the day. And someone asked me like a pretty good question too, which I didn't get back to them. But they said, does this trigger the 80% bearish rule? If you're not familiar with the bearish and bullish 80% rule, so first of all, that's of course like using value area studies, which of course I look at in my charts. And what that means is when you start below the value area, when you start a period such as December, right? This is value area, for example, is for the month of December. That's not going to change, right? Because that's based on November's volume and price activity. But when you start a period such as November, and you start below the value area, once you break into the value area, there's an 80% chance that price goes from one end of the value area to the other. So, and I didn't make that rule up. You could Google that, right? You could Google, 80% rule using value areas. And that's basically it. Just means that 80%, there's an 80% chance that the price will get through the that whole value area in a given period. So again, you kind of have to cuff that a little bit with whether it's the beginning of the month or if it's the end of the month. Obviously, if you just break into the value area and there's 2 days to go in a month, then it's probably not going to be 80% chance. So there's a little bit of thinking behind that of whether that occurs in the beginning of the period or not. But the point is, somebody asked me because we did break above, in the first of the month, we got above the value area, and now we're back inside. So does this trigger the 80% rule? I don't think it does. I actually conferred with my colleague who came up with the MarketWebs, and we kind of agree that it's more of just a rejection at those highs and not triggering. You have to spend more time. You can't just spend like, it's kind of like, getting into a pool, right? And you dip your toe into the pool, right? And you're not going to get completely wet, right? So you bear, so it's kind of the same thing. It's like, well, this, there is a toe that was dipped outside of the value area, and I don't think that really classifies as, starting the period outside and firmly establishing itself, right? You're not in the pool, so to speak, when you just dip your toe into the pool. So that's my little analogy for that. So, basically we're not breaking out anymore, right? In terms of this period, we're also not breaking down. We're just kind of, staying sideways for now. What I always go to, and I went over this in yesterday's video, I also talked about it in the trading room quite a bit today, but just watching, the price around today's this week's value area, right? So this is the 1 hour chart. We've got this value area for the whole week. It's based on last week's price and volume, and we're just kind of staying right around the top of value. Also, we're staying right inside the value area, right? We don't really, price doesn't want to get outside the value area. It doesn't want to break down currently either. It's just content with, just chilling out for now, and maybe it's because there's more information that the market is waiting for. Maybe it's that jobs report. Maybe it's something else that hasn't revealed itself yet, right? But the jobs report is on Friday. So just bear that in mind, that the market just seems like it's not ready yet to make a major turn. And I don't think that there's anything wrong with it resting for a little while too, after it's had this big month of gains, right? So that's also something that I kind of think about. The Qs, which outperformed today, not by a whole lot, but was up today. This is a different looking picture than the S&P, right? This is more in the middle of the value area, and it did come into that 20 period movie. So when we, by the way, when we have a value area like this, right, where there's not much that I can really rely on a signal, right, because we started the month inside value, we've got a ways to the top of value and to the bottom of value. So I kind of rely on the moving averages for signals, right? And something like this where you break out, we're back below the 5 period moving average, so we've lost some of that upside momentum, but we're holding the 20 period moving average, which I think is a positive for now, right? Notice that we had this nice hammer bar, and then we moved up a little bit further today. We did not close on its highs. So I think for now, these are things to be monitored, because you do have this in the Qs. You do have this gap here that could get filled. So if we break this 20-day moving average, yes, I would watch out, right? And that's why it's kind of tricky in here too, because we're not doing anything. There's no major confirmation that we're going higher or back higher, and there's no confirmation that the bottom is in either, right? In terms of this little dip that we've got on our hands over the last week. And I think also there's, when you jump to the 1 hour, notice how different it looks than that S&P value area. Notice that we broke below the value area for the week. And, we had a little bit of a fight there in the beginning of the day, in the morning, where price tried to break into the value area and then got completely stuffed, right? Like the Matumbo, waving his finger saying, not so fast, basically, at 387.93 is the level to watch for upside continuation. But yeah, you don't really have anything that is really wonderful to talk about with that price action, right? That would have been a little bit more an improvement if we managed to get inside the value area for the week. But so we're sitting here below value, which we broke right in the beginning of the day yesterday, and nothing really to kind of to be positive to kind of hang our hat on, other than, we're off the lows pretty decently. So that's it. We're kind of waiting for more information there in terms of what the S&P, which is inside value, and the Qs, which is just right below the value area. What about IWM? Well, you could see from the bottom left of my screen, the breadth was not good today. And again, if you could also look at an advanced decline line, right? I'm going to go through some sectors, but you could see there's a lot more red on the screen in terms of sectors, right? Versus a lot more red than green. Only a couple sectors that, I only see actually one that was above 1% for the day. Is that right? I've got another sheet over here with that information on it. There's a couple things. Yeah, XLK, which was up 60 basis points today. So that because it's such a big portion of the market, the XLK tech is over 20% of the S&P. So when you have something like that happen, it negates a lot of this poor breadth, because a lot of the bigger companies did the heavy lifting today in terms of the overall performance of the S&P and of the Qs. So yeah, not good breadth. You have to, and so the question that I have here for the small caps, which drastically underperformed today, down 1.3%, is that all that we're going to get out of the small caps in terms of, we had a nice 2-day rally and not much thereafter so far, but we haven't lost anything here in terms of the momentum. We're still above the 5 period moving average. So if you're loving the small caps, and you're disappointed by today's price action, I would say on the positive side, we haven't lost the 5-period moving average, and we're also, unlike the S&P and the Qs, we're still above value. Now, now everybody has different conviction levels. I don't have a lot of conviction in IWM, and I can explain why really quickly. But if you look at the groups and the sectors, right, you've got a big concentration of banks are in the IWM. There's a lot of financials in there. There's also a lot of healthcare and biotech, and there's a few other sectors in there too. There's some tech in there too, of course. But I just find it very difficult to believe that I would rather wait for the trend to reveal itself. And I mean a trend other than sideways. But I think that you could play some of these turns. And that's essentially what I did. And I sold out of a small IWM trade that I had on. That I got long in the beginning of the day on Friday. Again, nice momentum, and that's how I kind of look at a lot of these names that are like the short squeeze, high short interest names, right? Usually the high short interest names, unless there's really something crazy going on, right? They see some short covering, they have some momentum in them, and then they kind of cool down a little bit, and then they go back to what they were doing. So that's my take on things that are reverting to the mean, right? Where kind of maybe got a little bit oversold, right? A little bit out of favor. Those things could bounce, but I don't know if you're going to get much more out of them, right? That said, even though I sold out of IWM, that doesn't mean that the move is over. I'm just happy getting small gains out of a trade and moving on for a group that I don't see as showing leadership right now in the market, other than the 2 days that it rallied, right? And also notice this virgin point of control. Maybe watch this 184 level to see if it can stay above there. And yes, there are other virgin point of controls above there, so it's important that it hangs on to this one rather than reverting back down. All right, so that's a lot of analysis there. I wanted to go over, so the next topic that I think I wanted to go over in this video was, what did well today? And I was on Benzinga's closing print, and I was talking about this, that you can't, the Magnificent Seven, last couple of days I've been kind of dogging them, right? I've been kind of talking negatively about saying, hey, it makes sense to see rotation out of the Magnificent Seven. Let's see if some other areas outperform. But the whole question is, how much were these things going to sell off, right? And Apple was kind of the leader of the group today. I think that there was an analyst who was making comments about the stock, but it's back above, it had just about a week and a half of digestion after taking out this VPOC, which is kind of what you should see, after reaching out and taking this, that all it takes is one big day, because Apple doesn't rally 3 or 4% normally. It moves up 1 or 2%. So up 2% is a decent day for Apple, considering, the volatility in that name. But just like that, one day, and it's back to, new highs for this year. So, or close, I'm sorry, this was the new highs for this year. But, so you can't stay down on these things for too long, because it is what it is. They are good companies, right? Apple's a great company, right? Nobody's throwing away their cell phone, right? That's one of the most valuable, ask somebody to give up their cell phone or give up something else and see what happens, and see what they say about giving up their cell phone. But anyway, I don't want to go off tangent here, but there's a reason why they're the market leaders. So same thing, I bought a little bit of Microsoft today, just because I think that Microsoft is a really good company, and I think that it can continue to go up here, even just after this little tiny dip, right? Tesla, on the other hand, right, and I have nothing against Tesla, by the way. I just judge a company by its price action, right? And this was not a good sign today, I would say. Great, because it's up 1.3%, but every time it seems to go up, it's making lower highs, right? It did not hold on to its gains. And I tweeted this out earlier. I said, watch 243. And I was in Tesla for a long trade last week, but similar to the IWM trade, I'm not going to be in these things for long because they're just too shaky. Their charts are not as strong or constructive as an Apple or a Microsoft, right? It's fighting every single time it tries to go higher, right? And by the way, like on the larger scale, right? This is the pattern: lower high, lower high, lower high, lower high. Now, again, I think it's important to watch for when it gets out of that pattern. maybe it will wake up out of that, but I don't want to mess myself or concern something. I don't care if there's option activity. I really don't. The price is what matters. It's interesting if there's call activity in it, but ultimately I want to see the price move higher, and I don't need to be the first one. Like, I trade trends. So if I look for something to get out of the pattern of making lower highs, I don't need to time the exact, pivot area of it turning around, right? I would rather want that confirmation because I don't want to be in a stock for $2 or $4, right? So at the very least, it has to break above here, and then hopefully it does start to trend, because I do own some Tesla in a long-term account. I dialed down the position size, right? Because it just hasn't been acting well in terms of, what the overall market has been doing, right? Here's the cues, right? Out of the pattern of lower highs, Tesla, not. So I don't care how much option activity comes in the name. So yes, so this was the group that was strong today. Again, it kind of, because there's such large companies, it kind of masked some of the under the hood weakness, right? And then I wanted to go through just a couple names, because now, like I said in the beginning of this video, I have over 80 names on my earnings strength watch list, so you can kind of begin to go through some of these things. And really quick, I did this in the Benzinga closing print right at the end of the day, but we're talking about 3 companies: DraftKings, Shopify, and CrowdStrike. Why those 3 companies? I don't know. They were just 3 companies that were on my radar. But DraftKings, right, had this nice earnings move, some nice follow through after it reported earnings, because here's the earnings candle. This was at $33, so when it did go all the way up to 39, that's a nice percentage move, right? And now what you want to see is, now that it's dipping a little bit, you want to see those institutions come back in and say, hey, I want to get back involved in DraftKings on a little bit of a move from the highs, right? If we start to see a move further down, right, it tells me that there's just more distribution, right? More institutions are getting out of the stock and taking gains, rather than thinking that the stock has that much more of a runway to the upside. Now, and of course, things could always change, but this is how I kind of analyze things, right? Shopify, which is another name that I'm not in right now, that I'm kind of, looking at. And this one was off to the races on earnings, right? Big, aggressive move after it reported earnings. Also, the market was really doing well, right, through November, so they had good timing as well, right? Because a lot of CTAs and so forth are buying, right? Now that this is consolidated, and notice how shallow, right, this call flag is, right? Just consolidated a little bit, right, and now being bought up again. So I think this name can move up to 78.94. But the difference between a DraftKings and a Shopify is, right, it just doesn't have that deep of a pullback, which means that the institutions are not really selling. Also, look at the volume today. Notice how this green candle, right, there's a lot more buyers on the green days. There's a couple of red days in here where maybe there was a little bit of profit taking, but still not as much, still dwarfs this candle, right? And then CrowdStrike, which is another name that has been on a humongous run, but notice what's happening here, right? There's no sellers yet in this name, and I can't tell you when. Like, I don't have a crystal ball. I can't tell you when an institution starts to sell, but I can tell you that right now it's not presently doing that. And people are still kind of, I don't want to say chasing CrowdStrike, but they're not letting it go down too much. So even if somebody is taking profits, they're not doing a whole lot of them, right? And you could see the volume as well. But I think that this is very constructive, in a name like CrowdStrike, which I do own in my TTG trend portfolio. Also look at Palo Alto, right? Palo Alto had one red day, opened up lower today, and look at the buyers come right back into this name, up 2%. So again, there's a lot of demand out. There's a lot more demand right now for these names than some of the other names that are pulling back a little bit deeper. So I'll end it there. I thought that this MDB, I did have on an earnings trade for MDB. I can't tell you why it's down. It was trading down, or if it still is trading down. It is still trading down a little bit. Maybe that the expectations were just a little bit too high, right? Sometimes these names like GitLab, Like, I don't think anybody was really talking about going long, for GitLab earnings. And, that's been a lot of the cases, I think, in software, some of these software names, you haven't really heard, some of the more unpopular names, right? We talked about, Elastic the other day, right? This name had a huge move, perhaps because people maybe just gave up on it a little bit, right? It was an underperformer in the month of November, right? And look at this thing, still has legs. Where I think MDB, everybody was kind of looking for this move. So the fact, maybe it's shaking people out. I think it could turn green here at some point, maybe not in the after hours today, but maybe tomorrow, because I didn't see anything negative. Maybe they'll say something on their earnings call that will reveal itself. So in any event, the bottom line is, as the market is consolidating and the indices are taking a little bit of a breather going sideways, patience, right, is really the name of the game right here, right? Don't don't have that FOMO where some idiot on Twitter is ranting about how great this month of December is supposed to be. Wait until you get some confirmation, right? Wait until you see the indices kind of regrouping and starting to kind of break, like at least for the Qs back into the value area for the week. All right, that's all I have for you. Have a great night. See you tomorrow.